Let's proceed to exercise 2-3. Let's start with the even numbers. Group 4, number 2.
So, first statement. There is a hierarchy of primary users in designing the general purpose financial reporting because investors, lenders, and other creditors have different information needs. Investors' needs must be a priority. Second statement. The objective of the general purpose financial reporting must differ depending on the type of entities. Objective must differ between smaller entities versus larger entities. Entities which are publicly listed versus those who are not, and closely held entities versus widely dispersed ownership. So our answer, sir, is B. Both statements are false because in the first statement, there is no such thing as hierarchy of primary users. Since in the terms of conflict of needs, the board will seek to provide information that will meet the needs of the maximum number of primary users. In the second statement, it is also considered as false since the main objective of the financial reporting is to provide information about entities that can satisfy the needs of the primary users, and it is not stated that such information will differ depending on the type of entities.
Okay, very good. Number 2 would be bravo.
Number 4, which is incorrect concerning financial statements. Our answer, sir, is letter B. Okay, letter B. Financial statements are prepared and presented at least annually and are directed toward the specific needs of a wide range of users. The explanation, sir, is letter B states that the financial statements are directed towards the specific needs of a wide range of users instead of their common needs, which makes it incorrect.
So that means Alpha, Charlie, and Delta are true statements. Okay, so please make sure to absorb Alpha, Charlie, and Delta class. So number 4 again is bravo.
Number 7. Which of the following statements is or are true? Letter C, both 1 and 2. Statement 1. Financial information without the two fundamental characteristics is not useful, and it cannot be made more useful by having all the enhancing qualities. Statement 2. Financial information that is relevant and faithfully represented may still be useful, even if it does not have any of the enhancing characteristics.
So your answer is both 1 and 2. That's correct. Because I hope I have emphasized this enough in the video. I have video discussion I have shared to you, class. It's very easy for you to think that 1 and 2 are false statements, but actually they are true, class. So number 7 would be Charlie. Number 9.
Which is incorrect concerning accounting constraints on relevant and reliable information. Letter B. If there is undue delay in the reporting of information, it may lose its relevance and reliability. So, if there is an undue delay in the reporting of information, it may lose its relevance, but the information can still be highly reliable with little use to users who actually needed the financial information for decision making.
Yeah, that's actually the trade-off, class. If you spend more time, the effect is that the information will tend to be more reliable, class. But the problem is, if it's too late already, then it may no longer be considered as relevant, class. Okay, so that's why letter B is the incorrect statement. That means A, C, and D are true. The benefits derived from the information should exceed the cost of providing it. This is what we meant by the cost-benefit analysis, class, the cost constraint. Letter C, in achieving a balance between relevance and reliability, the overriding consideration is how best to satisfy the economic decision-making needs of users. Letter D, it may often be necessary to report before all aspects of transactions or other events are known, thus impairing reliability. Okay? This is the flip side of letter B, class. You may, because you are trying to target relevance, then you may be compromising reliability, but that's fine as long as it is still within acceptable bounds, class. But important to note, class, I think number 9 is an old question, class. This is a question from the old framework. I hope you've noticed that the latest framework was issued on March 2018, class. And in the March 2018 framework, we no longer have relevance and reliability. Before, These are the two most important considerations, class: relevance and reliability. But now, what do we have as the most important considerations for a useful information, class? What do we consider as your fundamental qualitative characteristic? We have relevance and, aside from relevance, class, what's the other fundamental qualitative characteristic? Faithful representation. We now have relevance and faithful representation. The issue between relevance and reliability was more of a concern under the old framework, class. But based on the latest framework, the 2018 framework, there's no the focus is not so much now on reliability, class. It's relevance and faithful representation. Number 11, please.
This process involves the simultaneous or combined recognition of revenues and expenses that result directly and jointly from the same transactions or other events on the basis of direct association between the costs incurred and the earnings of specific items of income. Our answer, sir, is letter B, matching of costs with revenues. The process of matching of costs with revenues recognizes expenses on the basis of direct association between the costs incurred and the earning of specific items of the income. This means that these elements are directly connected with the same transaction or event. They will be matched accordingly. For example, the various book components of expense making up the cost of goods sold are recognized at the same time as the income derived from the sale of goods.
Class, this is very important, class. This is the matching principle that is very common in accounting, class. And even though you're familiar with matching principle, when already asked this question, you know that it's matching principle, class. But when you look at letter B and letter C, you now get confused. I know it's matching principle, but what am I matching? Am I matching the cost with the revenues, or am I matching the revenues with the cost? So our answer here would be bravo, class. Let's have 13.
The following statement pertains to the concept of income and expense. Which statement is correct? Letter B, sir. The definition of income encompasses both the revenue and gains. Revenue arises in the course of the ordinary activities of an entity and is referred to by a variety of different names, including sales fees, interest, dividends, royalties, rent. And revenue is the total amount of income generated by the sale of goods or services before any expenses are taken out, and the net income is calculated by taking revenues and subtracting the cost of doing business. It is the income that encompasses both the revenue and gains.
So what do we have to do to letter B to make it true?
And I interchange the definition of income, sir. Encompasses the revenue and gains.
That's correct. For this to be true, this should have been the definition of income encompasses both revenue and gains. This is the source of confusion, class. Which one is broader, man? Is revenue broader than income, or income broader than revenue? The answer is, it is income that is broader, class. Your income encompasses or engulfs both revenue and gains. I'd like to bring your attention to letter C also, class. The definition of expenses encompasses losses as well as those expenses that arise in the course of the ordinary activities of the enterprise. So, the side of expenses is not actually as confusing, class. Okay, it says expenses includes losses and expenses. Do you get my point? So, balik-balik na ba? Whether maglibog ka which one is broader, it's not a problem because the broad term expense already includes the narrow term expenses from operations. Okay? So, that's why letter C would not be the source of tricks in the question, class. You would always be tested with letter B. Okay, you would be asked to recall which one is broader, income or revenues. But for letter C, class, there's no reason for you to be confused because if we try to simplify letter C, it just tells you that expenses includes losses and expenses. Because letter C is confusing in itself, you will no longer be confused, class. Okay? It says expenses is part of expenses. Expenses encompasses expenses. That statement alone is confusing already, so that's why you will now you will never be tested on that concept in the exam. Where will you be tested? On whether you know which between income and revenue is broader. And again, it is income that is broader. Income encompasses both revenue and gains. Because I hope you get my point for letter C, class. There's no need to be confused with letter C, Kai. Even if you're confused, your answer would still be expenses and that would still be correct. Let's have 15.
The allowance for doubtful accounts, which appears as a deduction from accounts receivable on a balance sheet and which is based on an estimated of bad debt, is an application of the letter C, sir, matching principle.
Okay, that's correct. Number 15 would be matching principle. Can we have letter 16 also?
Which of the following arguments again using historical cost in accounting? Letter D, sir. Fair values are more relevant.
Okay, that will be correct. Which of the following argument against using historical cost in accounting? Letter D would be fair values would be more relevant. Why is it more relevant, class? Because it gives you the measurement, the current measurement of the asset or liability class. Again, as what we've mentioned before, which information is more relevant? Older information or newer information? As we've said, it is the newer information. An historical cost class based on history or based on old transaction. It's an old measurement, so that's why it's not as relevant as your fair value measurement. But again, this is where students get confused. Which one is more confusing? Which one is more used in the financial statements? Historical cost or the fair value measurement? The answer again is historical cost because it is more verifiable. But again, what would be the opposition against historical cost? It would be your fair value. And what advantage does fair value have over historical cost? Fair value is more relevant. Why is it more relevant? It represents newer information. Is that clear? Class, we'll have to end here, class.